To discuss some of the events which could be shaking markets next week, I'm joined by Michelle Girard, Managing Director and Senior Economist at RBS headquarters in Stamford, Connecticut. Michelle, in regards to economic releases, we got a lot of data coming out of the US next week. Things are starting to look up slightly for the US economy. The economy is growing slowly, but it's still growing, and US economic data has continued to be mostly on the upside. But do you think this is a trend that may falter soon? And what are you expecting from some of next week's data?
I do think that the trend toward generally resilient growth in the U.S. is going to continue. Next week, we only have some sort of secondary indicators in terms of existing home sales and durable goods orders. We will actually also get more information on a broader measure of consumer spending. I think that may garner a good deal of attention. Like the retail sales figures we saw this week, I think those numbers on consumer spending are going to be relatively strong. Next week we'll get a revision to third quarter GDP growth. It might be small and downward, but the bigger story is tied to these better consumer spending numbers. The expectations for fourth quarter GDP growth are being raised, and I think the numbers next week will probably solidify estimates for fourth quarter growth around the 3% mark.
This week, Fitch Rating warned about the credit outlook for US banks should the European debt crisis deepen and spread further. But how much exposure do US banks actually have to Europe's struggling nations?
Well, I think this is the information that everybody is trying to get, and I think it's in some cases it's difficult to ascertain, and it's certainly not the exposure is not uniformly spread across all institutions. Clearly, we're watchful of the impact of the obviously struggles in the Eurozone on the U.S. and the way that it would impact the U.S. would be through the financial market channel, and it would be through less a pullback from financial institutions in terms of lending and a broader credit crunch. I mean, today it does not appear that that is a significant risk. Financial market conditions are nowhere near as tight as they were in the days that followed the Lehman bankruptcy. And I think it's important also to recognize, speaking about banks and U.S. financial institutions, obviously they're in much stronger position now than they were in 2008. Leverage is removed from the system. Capital levels are much better. So some have argued that this may not pose the risk to U.S. institutions that many people fear.
Before we run out of time, there's a lot of economic and political pressure coming out of the Eurozone as contagion fears are spreading to even some of the more healthier European nations. Do you see any major developments likely to take place over the next week or two?
Well, unfortunately, it doesn't look like policymakers in the Eurozone are close to any kind of a plan to stem, obviously all of the turmoil. Clearly, the more dire the situation becomes, the more pressed into action policymakers will be. So, you can't rule out anything, and I think that's what makes the market so volatile and has people quite hesitant to take bets or action in either direction because the news flow is so rapidly changing. I have to say our view here in general is that at some point between now and year end, the ECB will probably be forced to come in with quantitative easing. I think that this is becoming kind of rapidly the consensus view. I do think when that happens, there will be at least a temporary relief rally in the marketplace. But I guess in general, our house view is that the news is going to get worse before it gets better in the Eurozone.
To end then, Michelle, considering everything that is going on at the moment, what kind of range can we expect to see the euro-dollar trade in through to year's end and into the beginning of next year?
Well, I mean, I think it's going to be obviously very dependent on the situation as it unfolds in the Eurozone. I mean, clearly, if our scenario is correct, there's going to be near-term pressure that could be alleviated if policymakers take action. But our general view is that the euro-dollar is going to continue to be pressured because the situation in the Eurozone, even after the ECB announces QE, is not going to be resolved.
Thanks, Michelle. It was great to speak to you again. To keep up to date with all the latest news and economic news releases, stay tuned to Dukers Copy TV. Have a great weekend. Goodbye.